Good evening and welcome to Arizona Horizon. I'm Ted Simons. Recent mass layoffs at major U.S. companies, most notably Amazon and UPS, raising concerns over the job market and the direction of the economy. For more on this, we welcome economist Sean Ewan. He's from ASU's Seidman Research Institute over at the W.P. Carey School of Business. Good to have you here. Thanks for joining us.
Thanks for having me.
All right, so we got large-scale layoffs at these major companies. What's going on out there?
Well, you hear about tens of thousands of people getting laid off. It's never a great sign for the economy, is it? But I think looking at the aggregate data picture tells a little bit of a more nuanced story, and that's that the labor market is still relatively strong, but there are signs of underlying weakness. What do I mean by that? Well, we've seen massive employment slowdown this year, right? We saw from May to August, we saw about 27,000 jobs created per month on net. That same number during the previous 12 months was about 150,000. So that's a big drop. Unemployment has increased marginally to 4.3%. Now, that's still really low by historical standards, but it is the highest we've seen since 2021. So it gives some cause for concern.
Indeed, and we talk about Amazon at 14,000 layoffs, UPS 48,000, Paramount 1,000 is the start of, I guess they're going to do more here down the line. Target isn't planning apparently to hire special workers, part-time workers and temps for the holiday season, and even Target is planning on laying some people off after the holiday season is. So is it a correction out there, or is it something else?
Well, it's tough to say, and it's tough to say how much these layoffs are representative of the broader trends. Number one, because the United States sees 5 to 6 million hires per month and 5 to 6 million total separations. So these layoffs are a pretty small fraction of that. But furthermore, we don't have great updates to the national labor statistics as of now, right? The government shutdown has caused a blackout in a lot of this data, so we didn't get the update for September data that we otherwise would have, and we're also not going to get the update for October that we otherwise would have.
So again, you refer to layoffs. Layoffs remain sluggish, I guess would be one way to look at it.
Yeah.
But the jobless rate at or near 4% for the last 16 months.
Yeah.
Does that make sense?
Well, again, it is low by historical standards, but it is rising. And I think the Fed would agree with me that this is a cause for somewhat of concern because last week they lowered interest rates. This is kind of a big deal because inflation remains above their target of 2%. I believe for September it was 3%. Lowering interest rates usually causes inflation. So the fact that they are lowering interest rates to bring the jobless rate down indicates that they think that this is relatively a big deal.
Is that something that you think they will continue to see as a big deal? Because, again, we're all looking for numbers here, and they are, as the Fed, I'm sure, is as well, but they've got their own numbers, I'm sure. What do you expect? How do you expect them to react to this kind of stuff?
Well, it's tough to say, and I think during their last presentation when they announced these job cuts, Chairman Jerome Powell said that he wouldn't rule out keeping rates steady or rule out prioritizing inflation in the future, but what he really said was that we need clear data on this, and that if we don't end this blackout of government data, the best course of action would just be to stay the course and not change interest rates at all.
As far as these mass layoffs are concerned, how much does AI have to do with this, and the idea that companies might be looking ahead and saying, well, AI can take care of 15 of these workers. Let's streamline, let's get lean and mean. Is that what's going on out there?
Well, I would say it's unlikely. It could be that these last mass layoffs that we saw just in the last couple weeks are the start of that. But in terms of the weak labor market so far this year, I wouldn't say that plays a major part because we don't see it in the aggregate data statistics, right? We don't see massive changes in the composition of employees. We don't see changes in more AI-exposed occupations disappearing. We don't see changes in the number of unemployment claims by workers in exposed industries increasing. So I don't think that plays a big story right now. but certainly it could in the future.
Do we know what exposed industries are out there when it comes to AI? It seems AI is just on Wall Street, it's a frenzy out there. Everyone thinks AI is going to be, it used to be everyone was afraid it was going to take over the world. Now it's like it's the savior of everything. I mean, it goes from one side to the other.
Yeah, good question. And we don't know for certain, but we have certain methods of looking into this. We think that fairly routine but cognitive tasks are relatively more AI exposed than other things. So stuff like HR professionals or business analysts, they might see more AI exposure than, say, a plumber.
Interesting.
Yeah.
All right, these mass layoffs that we're seeing right now, are we expecting to see more from major companies?
Well, we certainly could. I mean, I think one explanation for this might be tariffs. Tariffs are a drag on economic growth. And outside of a small handful of tech companies, corporate profits have declined this year. They're still strong, but they've declined. And so that indicates that maybe they've drawn back investment a little bit. And when you draw back investment, you need less employees to carry out your business practices. So that would indicate more layoffs, less hiring.
I was going to ask about tariffs. Are tariffs, are they a bit of a lagging indicator here? Are we not going to know about tariffs till the genie's out of the bottle here?
Well, I think we can say that tariffs have had a little bit of a subdued impact relative to what we expected, partly because of loopholes and partly because corporate profits were strong going into this year, and it allowed corporations to kind of eat up some of these tariffs. But this is still a drag on economic growth and economic activity, and forecasters expect lower economic growth this year than they did a year ago, and that's an indication of the effect of tariffs.
Okay, so, and I should mention, UPS did cite tariffs as one of the reasons why they got rid of, what was it, 48,000 employees.
Yeah.
So the bottom line, do major layoffs, when we see this kind of thing, does that signal major changes ahead?
Not necessarily, but it is cause to be a little bit wary. It would be nice if we had the federal government data to kind of give us a better indication of where the labor market is. But now all we can do is hope for updates to that soon. And in the meantime, take these layoffs as maybe an indication of things getting worse, but not a strong signal.
Interesting. Sean Ewan, ASU economist, good to have you here. Thanks for joining us.
Thank you so much for having me.